Okay, here we are. We're going to get started on our review of the standard agreement of sale. We're starting off with the mortgage contingency. Hold fast. I'm going to do a screen share for us. If I can find out what I'm sharing. Okay. Can everybody see the standard agreement of sale in front of you? Then we're off to a good start. Bear with me as we scroll down. Sorry, got carried away. So I think we covered last time the new addition in this year's version of the agreement of sale, where we went from two options under buyer financing to three. So, quick recap on that. Not applicable is used to define specifically that this is a cash deal, right? This previously it was electing or waiving the contingency, and it was often assumed that if the contingency was waived, that it was going to be a cash purchase. And they wanted to add another level of specificity to this agreement to clearly define what was going to be cash and what was just waiving that contingency. So if you hit not applicable, you don't have the option to send in a lender or an appraiser. You are stating to the seller that there will not be mortgage financing involved. This is going to be a cash purchase or cash equivalent purchase, home equity loan, cash out of stocks, or it doesn't matter. You're bringing cash to the table. There's not going to be a lender there sending a wire with a mortgage. Okay, waived. This is not contingent upon mortgage financing. Um, the buyer and seller understand that the waiver of this contingency does not restrict the buyer's right to obtain mortgage financing. But what happens if they can't get the mortgage financing, gang? The EMD is still at risk. That means that EMD is more likely than not, in this case, going to go to the seller if they have to bag out of this deal. Option two leaves that does not protect your buyer. Option three is, the standard that we usually see, and that makes it contingent upon the buyer obtaining mortgage financing according to the terms outlined in paragraph 8H. Let's focus on paragraph B here. The buyer will be in default of this agreement if the buyer furnishes false information to anyone concerning the buyer's financial and or employment status, fails to cooperate in good faith with processing the mortgage loan application, including payment for and ordering of appraisal without delay, fails to lock in the interest rate as stated below, or otherwise causes the lender to reject or refuse to approve or issue a mortgage loan. This, I think, is a valuable time to contribute, make this a group discussion. What does that paragraph say to you? There's a lot packed in there that's very rich text. Does anybody have any experience with anything that might have been touched on in that paragraph? How many times have you called to find out where the appraisal is and the lender said, "Oh, we were waiting for the home inspection"? Have you ever heard that? Could that be considered a breach of this contract? In my opinion, yes. Because it says here in the parentheses, including payment for or ordering of appraisal without delay. That means you're ordering that appraisal right away. So be careful, protect your clients. Don't wait to have that appraisal ordered. And be aware.
Justin,
Yes.
I've never had that. I've heard of it. That has never been a personal situation.
Yep.
But, with an ever-changing market, et cetera, and you're a little bit concerned about that, you don't want to go through changing an appraisal, could you shift that or make an agreement in writing, or are you now changing or adding language into a contract that you shouldn't?
Um, I would prefer to handle that a different way, where
Okay.
we go up here. Nope, sorry. Where it says our timeline right here. Dun, dun, dun. Let me get to it. Buyer may elect to make this agreement contingent upon ordering mortgage financing, regardless of any contingency elected in this agreement. If buyer chooses to obtain mortgage financing, the following apply. Within 7 days from the execution date of this agreement, the buyer will make a completed mortgage application, including payment for and ordering of credit reports without delay for the mortgage terms, blah, blah, blah. You can't order the appraisal until you make the mortgage application. So without delay means whenever you make this mortgage application, that's when you're ordering the appraisal. All right. So if you want to push that out, here's the time frame that you're toying with right here. Okay. So rather than
Okay.
7 days, you make it 12.
Okay.
That gives you your 10-day inspection period plus a
Got it.
couple days. Okay. So that's
Perfect.
that's where you would monkey with that stuff.
Okay. Thanks.
Yep. Um, what else do we have in that? Um, if your client furnishes false information to a lender, we get to the finish line and the lender's like, honestly, I didn't know what this guy was doing. He didn't tell me about this. We didn't find that. That's the kind of stuff that can be a problem. I've had clients and I've heard of clients who were just so frustrated with the back and forth that they just stopped answering questions. That would fall under that category of causes the lender to reject or refuse to approve or issue a mortgage loan. So if they stop answering questions about what's this deposit, what's that deposit, where'd this money come from, I need your tax transcripts, that stuff right there is failing to cooperate in good faith with processing the mortgage loan application. So be aware of that. Advise your clients of that process up front. I've had numerous clients say, if I knew it was so hard to get a mortgage, I wouldn't have tried to buy a house. Some people are just wired that way, right? Some people really struggle with that kind of detail and compliance and paperwork. We may have to be ready to help them out if we can. We're dealing with that same situation in our mid-pen office where a client just didn't realize the level of documentation that they were going to have to provide, and we're having some issues with it. I think we're going to get through it though. So subparagraph C through G only applicable if options 2 or 3 is elected. That means where there may be a mortgage. So these apply if it's not a cash purchase. The buyer may elect to make this agreement contingent upon obtaining mortgage financing. Regardless of any contingency elected in this agreement, if the buyer chooses to obtain mortgage financing, the follow apply. They have to, within 7 days from the execution date of this agreement, the buyer is going to make that completed mortgage application. That's what we talked about, Kristen, including payment for and ordering of the credit reports, etc. For the mortgage terms and the mortgage lenders identified in paragraph 8H, if any, otherwise to a reasonable mortgage lender. of the buyer's choice, the broker for the buyer, if any. Otherwise, the broker for the seller is authorized to communicate with the mortgage lender to assist in the mortgage loan process. Broker for seller, if any, is permitted to contact the mortgage lenders at any time to determine the status of the mortgage loan application. Have you ever done that as a listing agent? Reached out, talked to the lender and say, "Hey, where are we?" Have you ever reached out to the lender before accepting the offer to get the straight story on this person? That's perfectly okay because of this statement right there. Some buyers agents may feel that's an intrusion of privacy, but it's protected action here in the agreement of sale. The seller will provide access to the insurer's representatives and, as may be required by the mortgage lender, surveyors, municipal officials, appraisers, and inspectors. So even if you have not elected any other contingency, if the insurance agent needs to have an electrical inspection done to verify that there's no knob and tube wiring, seller has to let them in. If we need to verify whether this is a shared sewer line or something, you may be playing that game. So those are things that could happen, and those are protected here. Did I hear somebody talk? I welcome that. Now, the seller will provide access to the insurer's representatives and, as may be required. Oh, we already talked about that. Sorry, reading the same stuff. If the mortgage lender gives buyer the right to lock in an interest rate at or below the maximum levels desired, the buyer will do so at least 15 days before settlement. So if your client is floating the loan, if they're floating it, they need to lock in at least 2 weeks prior to closing. If they don't lock it in and the interest rates bump up above the minimum that you've selected in your contingency, they don't get to terminate. Has anyone ever had a borrower terminate because the interest rates jumped up above what their contingency said? That has happened. That happened especially coming out of our free money COVID days, the sugar rush. Now interest rates seem to be floating down a little bit, so you're less likely to see that. Although we did have one just the other week. We had a client back out of a investment deal because their interest rate hopped up on them. So loan to value ratio is used by lenders as one tool to help assess their potential risk of a mortgage loan. A particular loan to value may be necessary to qualify for certain loans, or buyers might be required to pay additional fees if the loan to value exceeds a specific level. They go into the detail of explaining this because it's mentioned elsewhere, right? Sorry, skipping the wrong way. You see your loan to value here in the financing block. Your loan to values here. So this is the structure of your mortgage contingency, right? If you put in a loan value of 200,000, minimum term of 30 years with a conventional mortgage, and your loan to value ratio is not to exceed 80, what are you trying to accomplish? You're trying to get your buyer out of paying PMI, right? Now, what happens if the property doesn't appraise for the full price? That changes your loan to value ratio, meaning that it would come in below the 80. Now your client might be responsible for PMI, and that could change their payment picture, basically taking them out of where they're comfortable. In the old days, the contract was written differently, and we looked at this as a backdoor appraisal contingency. Does anybody remember that? We used to say you didn't need an appraisal contingency if you included the loan to value ratio. That is not the case. Why is that not the case? Because the buyer has no right to terminate the agreement under the mortgage contingency. You would have to ride this out until the seller terminates or you reach closing without a mortgage loan. It's a very dangerous position to put your buyer in. Okay. If we want to have a workshop specifically on loan to value ratio, we can do that. This is it's pretty elementary basically, but there are some confusing things that come into it. And if you want to have specific talks on how to come to the loan to value ratio, we can do that. But we can save that for another day. Any specific questions so far? Now, we won't be using an appraisal contingency on FHA, VA loans. We'll talk about that appraisal contingency another day as well. That appraisal contingency says right across the top, not for use for FHA or VA loans. This will serve as your appraisal contingency for the VA loan. So you can put your sale price right in here. And it is expressly agreed that notwithstanding any other provisions of this contract, the buyer will not be obligated to complete the purchase of the property described herein or to incur any penalty by forfeiture of earnest money deposits or otherwise, unless the buyer has been given in accordance with HUD, FHA, or VA requirements, a written statement from the Federal Housing Commissioner, the Veterans Administration, or a direct endorsement lender setting forth the appraised value of the property of not less than $300,000. The purchase price as stated in this agreement. The buyer will have the privilege and option of proceeding with consummation of the contract without regarding or without regard to the amount of the appraisal valuation. So if the buyer wants to move forward, they can, because they have that privilege and option. HUD does not warrant the value or the condition of the property. If you are doing a VA or an FHA deal, frankly, I believe that if you're doing any deal, it's not a bad idea to have them sign for your protection, get a home inspection. We have our multi-purpose form, which talks about home warranties, home inspections, and fraud and deposit money notice all on one slip. But, you know, for your protection, get a home inspection is a great form. It's very formal looking, and it gets the point across that people should consider a home inspection. As a broker and agent, I love home inspections. I think I don't like negotiating with them, but I do love that it limits the liability for everyone involved. If you're a seller, if you're an agent, everybody has a educated opinion about what they're purchasing. Has anybody done a 203K? Shout out.
Could I just mention something?
Please do.
And if on the form, it also specifies that the buyer can reject or not select the home inspection also.
That's
so
correct.
That's really important to cover your derriere.
Yes. A divorce attorney once said, I like attorneys because they're all about they're expensive until you need them, but they're all about protecting us from liability. You guys don't need this distraction, but they say the only people that can hurt you are people that you work with, right? Client walking down the street, that they really can't have any impact on you. But if they're involved in a transaction with you, that's when you're opening yourself up to liability. And we have to, unfortunately, we have to keep that in mind, that we have to protect ourselves, our livelihood, our family, and our brokerage, by being very careful. And I'm not saying that we want to catch anyone in a catch 22 or say, haha, you signed this waiver. No, what we want to do is manage their expectation. And these forms that we use, especially for your protection, get a home inspection, it's about managing expectations and giving us one more prompt to explain to that client what the risks are and giving them one more chance to say, wait, I don't understand. Can you explain more? Or no, I'm very comfortable with this. We have we have the ability to do these repairs. I'm not concerned about that. Whatever. These forms, as much as their liability limiting instruments, they're also just a chance to manage expectations and have good substantive conversations with our clients. And that's what's important. So we touched on this briefly.
Hey,
Yeah. So I think I put a sale price up there of 300,000. So we'll do that again. If we're doing our 80% loan to value ratio, I take 300,000 times 0.8 to arrive at that 240. Okay. 30-year term. That could be a 20-year term or a 15, or it could be a 3-year adjustable rate mortgage. That's kind of unusual these days, but they're out there. So put in your type of mortgage. And if you can't qualify under those terms, then that's going to be reflected on your mortgage commitment letter. Now, what you're looking for as a buyer's agent, you want to have this discussion with your lender. I prefer that you use a lender that you've used before, somebody with a local reputation. That's important. You know how they work. That's important. Why don't I like online lenders? Because I don't know them. Nothing against them personally, but these big companies, these guys are pre-approving 50,000 people a month. And if your client doesn't make it to the closing table, it doesn't affect them. It doesn't affect their reputation. It doesn't affect their pocketbook, doesn't affect their families. Only people it affects is your client, the clients on the other side of the table, and the agents involved and everybody's families. So I prefer to use somebody that we know how they work. If they say that the client is not pre-approved, it means that they're not pre-approved. If they don't get pre-approved with your local lender and then they go online and get a pre-approval from a bank that you've never heard, is that going to be an easy transaction, guys? No, because they're all looking at the same stuff. And these are government underwritten loans. If they get declined by a local lender and get approved by somebody online, it means somebody is not looking at the information as carefully as they can, because everybody wants to close this deal. It's that the guy on the other end out in Detroit is willing to throw spaghetti against the wall and see if it sticks. That's not a slam dunk deal. So be aware of that. If you're working with buyers and they get turned down by a local lender but approved by somebody else, start asking questions. All right. You want to make sure that your pre-approval matches the information that you put in this block, because this is what the listing agent is going to be looking at. They're going to be matching the pre-approval letter with the information on this block and the information that comes on that mortgage commitment letter. If anything is different that pops up on that mortgage commitment letter than was printed here or on that pre-approval letter, Your seller has the right to terminate this agreement. Does everybody understand that? Just a small use note. If I'm using Fidelis, I'm going to put Micah Davis on here so that we know that if they know that I know who this is. You can even put a phone number in here. You can get the information on here. Interest rate, 5.75. I don't know. What's today's rates? What's going on out there? About 6.25. What are we putting in for a cap, a not to exceed number on that interest rate? If I'm a buyer's agent trying to protect my client, I don't know. I think 3/8 of a point is a healthy swing. So maybe 6.675 in there.
Sometimes the lender provides that.
Yeah, I don't think there's ever been a time I can think of where I didn't call the lender
Okay.
to.
And
That's-
say what was the most that you could afford?
Yeah.
Yeah.
Ask for the range. For them.
Yeah, absolutely. Yeah, that is best practice. That's the way to go. Now, if I've seen agents put in 6.25 and 6.25 with offers coming across my desk, if I have the listing, whoops, I'm going to call them back and say, that is not a good move for my seller. Can we do any better on this window? Can we get that up to 6.675? Or were you just trying to get a get out of jail free card buy on me? I don't like that. Don't do that. So, mortgage commitment date. Tell me, what's the importance of the mortgage commitment? And what's the importance of the mortgage commitment date?
Are you talking about that the seller can get out of it if they don't turn it in? The buyer doesn't turn in the mortgage commitment by that date?
That's very important stuff. Yes. That's one of the things I'm talking about. So, what is a mortgage commitment? Mortgage commitment is the letter that comes out that says we're committing to lend you X amount of money under these terms on this date, and here are the conditions that are yet to be satisfied. And there's usually 3 sections. You know, the lender needs to do this, title company needs to do this, buyer needs to do this. And that, as a listing agent, is what you should be looking at. You, as a buyer's agent, should review that mortgage commitment. And as a listing agent, you should review that mortgage commitment. What are we looking for? Well, we'll talk about that here in just a second. So the interest rate and fees provision are satisfied if the mortgage lender gives buyer the right to guarantee the interest rate at or below the maximum level stated. Buyer gives seller the right at the seller's sole option as permitted by law, and the mortgage lender to contribute financially without promise of reimbursement to buyer and the mortgage lender to make the above mortgage terms available to the buyer. So how do we do that? That's in here. Discount points. This is very seldom used that I've seen that folks put stuff in that line. It's not very common in our market. I would see that more commonly in very high interest rate environments. It gives folks the right to buy down the mortgage loan. I'm not going to get into the weeds on that at this point. But if we do have this 6.25 to 6.675 window and things go haywire, like some sort of financial crisis, interest rates bump up to 7%, and the buyer wants to back out of the deal, the seller can say, not so fast. I called your lender. I found out for $3,000, I can buy down the rate from 7% to 6.675. I'm going to do that. We are moving forward with this deal to closing. Okay. That doesn't happen often. But if you had a buyer that was looking to get out of a deal because of the interest rate, that's a tool that your seller might use to salvage the deal if they were looking to shut a back door. All right. Have we had buyers try to get out of deals based on this interest rate? Yes, we have. Was the seller upset about it? Yes, they were. Could the seller have settled that deal or at least had the opportunity to move the deal forward? Yep, they could have offered to pay that interest rate buy down. So, Beth, we were talking about that mortgage commitment date. The seller may terminate this agreement after the commitment date by written notice to the buyer if A, B, or C. A, seller doesn't receive a copy of the documentation demonstrating the mortgage lender's conditional or outright approval of the buyer's mortgage application by the commitment date. It says conditional or outright. So it doesn't matter how many conditions are on there. It's conditioned upon the appraisal. It's conditioned upon the buyer filing their taxes. It's conditioned upon buyer explaining what these 14 huge deposits were. You need to get that to that seller on time. Now, the documentation demonstrating the mortgage lender's conditional or outright approval of the buyer's mortgage application, if it doesn't satisfy the loan terms outlined in paragraph 8, the seller may terminate. So if these things aren't met and the seller doesn't feel comfortable with it, they can cancel the deal. And then third, if that document contains any condition that wasn't specified in the agreement, the seller can terminate. So what are those? Some examples: that the buyer must sell another property. Well, that wasn't on the pre-approval. We don't have a sale and settlement contingency. We don't have the appraisal yet. Now, it does put a 7-day window to satisfy these things. So if we bring a mortgage commitment on the commitment date that says that we need to have the appraisal, seller has to wait 7 days to can that deal, to give that buyer a chance to remedy those conditions. What are some other conditions that I've seen that were reflected on a commitment letter that weren't disclosed anywhere else? One of my personal pet peeves is that somebody didn't write that it was a PHFA loan. PHFA requires a second set of underwriting, a second set of approval, and many banks don't disclose that that's a PHFA loan on the pre-approval letter. And a lot of times it doesn't show up in the mortgage contingent or the mortgage contingency block here. It'll just show up on that commitment letter that has to go for PHFA approval. That is, and the problem with that is PHFA looks a lot like FHA, even if it's a conventional loan.
So what would be the best way to go about finding out if that's what it is?
That's a conversation with the agent and or lender. Heck, sometimes the agent doesn't even know. But just have that conversation. Hey, are there any overlays on this loan that I should know about? Is how you would phrase that. So That seller's right to terminate continues until the buyer delivers documentation demonstrating the mortgage lender's approval. So that seller has the buyer over a barrel until they can provide that information. Until the seller terminates this agreement pursuant to this paragraph, the buyer must continue to make good faith effort to obtain the mortgage financing. Here's one of the most important and overlooked sentences in the agreement of sale. I wish that this one was in bold underlined print. It says that termination of this agreement by the buyer due to mortgage lender's denial of the buyer's mortgage application may demonstrate bad faith by buyer and result in forfeiture of deposit monies to seller. So for a long time, it was practiced that buyers could terminate the agreement of sale if they failed their mortgage application. Some years ago, language changed, and this states it in black and white that the buyer does not have the right to terminate the agreement if they can't get the money. Any questions on that?
Yeah, what happens?
What happens if they don't get the mortgage?
Yeah, just that the escrow deposit is held.
Well, buyer must continue to make a good faith effort. And we'll touch on, well, let me go there now. It says if this agreement is terminated pursuant to 8H2, 8H2 being seller may terminate this agreement after commitment date. So if the seller terminates based on A, B, or C here, is what we're talking about, or the mortgage loan is not obtained for settlement, all deposit monies will be returned to buyer according to the terms of paragraph 26, and this agreement will be void. So, what happens if you don't get mortgage commitment? You can't get the mortgage. Either the seller can terminate the deal and just get back on the market, or the day after closing, you're going to reach out and say, according to this paragraph, line 186, this contract is void and the buyer gets their money back. Now, the buyer is responsible for any costs incurred by the buyer for inspections or certifications, etc., but the contract is void. From a practical standpoint, Kristen, can the seller contest entitlement to the EMD?
Well, I don't know. I was just sitting here thinking like the seller seems screwed either way.
The seller can contest it. Does that mean they're entitled to it?
No.
But this is something that we need to explain to our sellers before, I see this happen most when we're dealing with these online lenders and we have a commitment date and then communication stops and we're chasing after them. We're on the phone 3 times a week. Now, we're frustrated. You call Justin. I say, all right, you copy everybody in the transaction and you email them breakfast, lunch, and dinner 3 times a day. You email them for updates. And if there's still no communication, and then the buyer wants to extend this and things go sideways, that's when sellers get really, really irritated. And that's when we see them contesting the release of the EMD. And it starts going to mediation. I see that a bunch. Now, Beth, I asked what the importance is of the mortgage commitment date. Seller may terminate this agreement after the commitment date. If there's no commitment date here, when can the seller terminate? They can't. Seller can't terminate. If there's no mortgage commitment, when can the buyer terminate? They can't. So everybody's locked up in this transaction. The proper way to pull that apart at that point is a mutual release. Nobody has the right to terminate, but everybody may meet in the middle, shake hands, and say, we gave it an honest effort. We're going to do a mutual release. That's the form AREL that I love, that absolves everybody of commitments and liability and distributes the funds. Okay? That's the importance of the mortgage commitment date. If you are the listing agent, you want that mortgage commitment date to be closer to the beginning than the end. You know, you don't want that 4 days before closing. You want to know that everything's on the right track 3 weeks into it, right? Assuming you don't have a 4-week closing. Assuming the average 45-day closing. Now, if you have a 30-day closing, yeah, push for a 2-week commitment date. As a buyer, I like to have that commitment date front loaded too. That way I know if there's issues that need to be rectified. I hate having a mortgage commitment date that's a week before closing, and then we get a sheet with a shopping list full of commitment issues that we need to work through because your lender was underwriting based on commitment dates. So make sure you don't overlook that commitment date. The last version of this form had that commitment date kind of tucked into a corner, and everybody was missing it for about a year. I like how prominent it is now. So any questions on all of that we've covered? Now, whenever I said that the buyer didn't have a right to terminate, I lied. Here's the one way that a buyer can terminate the agreement under the mortgage contingency. If the mortgage lender or a property and casualty insurer providing insurance required by the mortgage lender requires repairs to the property, the buyer will, upon receiving the requirements, deliver a copy of those requirements to the seller. They're going to do that within 5 days of receiving the copy of the requirements. Now, the seller will notify the buyer whether the seller will make the required repairs at the seller's expense. I'm sorry, I misread that. It's as soon as the buyer receives that stuff, they're going to forward it to the seller. The seller has 5 days to decide if they're going to make those repairs. Now, if the seller makes the required repairs to the satisfaction of the mortgage lender, then the buyer is going to accept the property. If the seller will not make the required repairs, or if the seller fails to respond within the stated time period, the buyer has 5 days to notify the seller what they're going to do. And they can decide to make the repairs at their own expense with the permission and access to the property given by the seller, or they can terminate the agreement. If the buyer fails to respond within that time period, then they basically are in breach of the agreement and they would lose their earnest money deposit. This doesn't happen all that often, but it did come up last week. Okay. Any questions on that fun little twist?
Justin, that that scenario doesn't mean that if the buyer gets a report from the insurance company and the insurance company is requesting something that never came up on anything else, that doesn't mean that the buyer can just automatically terminate the agreement based on that. Like, he has to go to the seller, and the seller has to have the option of replying to them that they will fix it or not.
Interesting. Now, if the buyer has elected the insurance contingency, the buyer may have the right to terminate that. But you're correct. They have to take this to the seller, and the seller has the opportunity to make it right.
So that would be like, I just think about, a crazy market when everybody waives everything.
Yeah.
And then a buyer's insurance company goes through it and they're like, hey, listen, this house needs a whole new roof. And then that buyer to themselves thinks, well, screw that. I'm not going to do that. I'm going to terminate. No, you can't.
Yeah, they
You
got
can't
into
just
a
terminate.
right, like the
Okay.
scenario I'm thinking of, they got into a multiple offer situation, goes $30,000 over asking price, and then the insurance company comes in and says, needs a new roof or needs a new electric panel. And the buyer's like, whew, I was starting to have cold feet anyway. Let's pull the ripcord on this,
Mhm.
right? Um, the reason I say that the buyer may have the right under the insurance contingency, that contingency is a wide open trap door based. I mean, it says the buyer may decide insurability. I mean, that's the only one where the buyer gets the decision. Basically, there's no real substantive standard. I mean, other than the home inspection. So if there's no questions, we will move on to change in the buyer's financial status. You need to raise your hand if you lose your job. Explain that to your buyers. If a change in the buyer's financial status affects the buyer's ability to purchase, the buyer will promptly notify the seller and the lenders to whom the buyer submitted a mortgage application, if any, in writing. A change in financial status includes, but isn't limited to, loss or change in employment, failure or loss of the sale of the buyer's home, buyer having incurred a new financial obligation, entry of a judgment against the buyer. Buyer understands that applying for or incurring additional financial obligation may affect the buyer's ability to purchase. This is an interesting one that I have not had real world experience in, but if that buyer goes out and buys a car, that's a voluntary action, right? That goes back up to the mortgage contingency. I think they have caused themselves to not qualify for this mortgage. I would fight hard if I was a listing agent to retain that earnest money deposit. What do you think? Okay. Seller's representation.
I agree, Justin.
Thank you, Beth. Um, if you're a buyer's agent, you're going to check the MLS and you're going to fill this in as appropriate. If you are the listing agent, you realize that there was an error and it's not actually public water, it's your job to correct this information and get that back. But this is, this isn't just a legal contract, it's also a guide to the transaction. So everybody's working off the same sheet of music here. You need to make sure this information's accurate. We're about due to have another septic guy in to do a training. We haven't done that in a couple of years. That would be worthwhile to explain what all these notices are. Typically, I prefer to sell properties on a public sewer because septic systems can, oh my gosh, they can just ruin your day. Like notice one is your standard system. So there's no current existing community sewage system available for the subject property. And it goes on to explain that this is your local system or your on-site system. I'm not too familiar with the 10-acre permit exemption. In our area, I don't think there are 10-acre permit exemptions. Notice 3, the property is serviced by a holding tank. That's not a good thing. That means that they have to pump those on a regular basis because they just hold the effluent. So that's a costly solution and a kind of a worst case scenario. That means that there has probably been a septic system failure. And then notice 4, this was a most likely a property that was constructed prior to 1972. And that means that that was before the common area of septic regulation. And that means that there is less than 100 feet between the well and the septic. And if you are listing a property, you should make sure that this is disclosed. Historic preservation. This is an important one. It can require a buyer to incur unexpected costs when dealing with renovation or property maintenance, and it needs to be appropriately disclosed in the seller's property disclosure. It also needs to be noted in the agreement of sale to make sure that everyone's aware that the property is in the historic district of whatever town you're dealing with. Has anybody had any fun with historic preservation? Now, the granddaddy of them all is the historic register. You can't even smoke a cigarette near one of those. I mean, I'm being a little bit flippant, but like no open flames, stuff like that. Historic preservation in Carlisle in the historic district just means you have to have the right windows and you can't put vinyl over brick and stuff like that. Land use restrictions. The one that we most often come across is clean and green. That's Farmland and Forest Assessment Act. There are agriculture area security. That is where you sell an easement for the property, and basically you can't do anything with that land except farm it. You might be able to build one house there. This agriculture area security, that drastically impacts the value of a property. Farmland and clean and green. So the ones to really watch for, I think, are these two: Conservation Reserve Program and Agriculture Area Security. Farmland and Forest Land Assessment Act, Clean and Green Program. Generally, I consider that a net positive for a property owner. If that has to be 10 acres or more, and it drastically reduces the tax impact on the homeowner. However, if they want to pull the property out of clean and green, for instance, they want to subdivide this 10-acre parcel into 5 2-acre parcels, they have to pay the difference between what tax was paid under the Clean and Green Act and the full assessed value for the previous 7 years. We just sold a property where they are pulling it out of clean and green, and that was a $35,000 tax rollback. This goes
Can I ask a
into,
question?
yeah, absolutely.
How does that work, if they have it clean and green, but if it's like zoned that way and, they wanna convert that?
Okay, clean and green is not a zoning thing. It is a voluntary enrollment, where you agree to, well, properties enrolled in the clean and green program receive preferential property tax assessment. Buyer and seller have been advised of the need to contact the county tax assessment office. Listen to that.
Okay,
Buyer and seller have been advised, so we are the ones advising that they need to transfer that application to keep that preferential tax. Okay. Now, if they want to pull that out, that's when you're going to reach out to the tax assessment office and say, hey, I need an estimate of what the rollback tax is going to be on this property. You can subdivide out 1 acre and pay the rollback on that 1 acre. You can pull the whole thing out and pay the rollback on the whole 40 acres, whatever. but make sure that you are aware of what's going on there. If you're looking at the tax value on a property and it's like $75 for 10 acres, start asking questions.
Can I
Okey-dokey?
ask, so I'm not like really familiar with all of those different things yet.
Yep.
Would you be able to do more detailed class on those?
Yeah, I guess we can talk about those.
Okay,
The difficulty is each county is a little bit
different.
different.
Okay.
Yeah, let me make a note of that. Yeah, I can absolutely do a quick info session on that, talking about the difference between ag preservation, which basically shuts down everything on that property forever, and then clean and green, which is a nice program that rewards people for keeping larger lots. Yeah, I've seen people go out and buy additional property, add it onto their property so they can get over that 10-acre threshold, so they can keep that all as open or forest space and pay less taxes. It's a good program and it works. Real estate disclosure law. Real estate disclosure law, how many units are we talking about? Not less than one and not more than four. So what does not less than one mean? Raw land, you don't have to do a property disclosure on. 5 units and above, you have to do, you don't have to do a disclosure on. So 1 to 4 units. Okay. The real estate seller disclosure law is not as involved as the form that we use, but I want to see our form used when possible. And I really like to see that seller shield used because it protects you all. Why does it protect you? Well, there's some write-offs on the errors and emissions insurance policy, but also it makes it really difficult for your clients to skip stuff. When we skip stuff, that's when we get into disclosure lawsuits. So I urge you, whether you are the buyer's agent or the seller's agent involved in a transaction, do your job, read that disclosure, and make sure that it's complete. If it's not complete, that leaves the door open for someone to start suing people. And I don't want to see you caught up in that. It'll ruin not only your day, but every day until that is resolved. So please do yourself a favor and avoid that hassle. What's an assessment? What's a public or private assessment? Seller represents that as the date the seller signed this agreement, no public improvement, condominium, or homeowner association assessment has been made against the property. So that would be, as a seller, I get a letter that the county or the township is going to require me to install sidewalks on my property. And I live on a corner lot and it's a double lot. So I'm looking at $15,000 worth of cement. I decide just to sell the house and I don't tell anybody. That is where this would have gone. That would be a problem because that changes the whole geography of the deal, right? That expense. This is where we have to express that information. Any notices from government authorities. It doesn't have to be the sidewalk. It could be the borough of Carlisle came around and spray painted pink stuff all over my sidewalk, things that I have to patch. My neighbor got a notice that he had to cut down his dead tree. So
Justin, I actually had that happen with a seller. He never
yes, we
disclosed
certainly did, Susan. Yes, we did.
Yes, me too. And
Yes,
mediation was talked about.
Yes, we did, Glenda. I remember
Ding,
both
ding.
those.
Oh,
Ours worked it out though. So
So
we
that's
didn't have to go to mediation.
he did the right thing. He did a good job. And then seller knows of no other potential notices, including violations or assessments, except as follows. So this is their spot to, cleanse their soul and say, hey, I got this nasty letter in the mail. I have to fix that. Highway occupancy permits, not generally a concern for residential properties with pre-existing structures because they probably got that highway occupancy when they bought it. This is going to be a concern for commercial properties with a change of use or vacant land that doesn't yet have a driveway on it. I want that to stick as a red flag in your head because getting a highway occupancy permit can be more difficult than you imagined. Say it's on a hill or a busy road, you may not get granted that highway occupancy permit without substantial structural improvements. That can be a very costly endeavor. Internet of Things. This one just came up last week. The presence of smart and green home devices that are capable of connecting to the internet directly or indirectly, and the data stored on those various devices make up a digital ecosystem in the property, sometimes referred to as the Internet of Things. Buyers and sellers acknowledge that the IoT devices may transmit data to third parties outside of their control of their owner. So on or before settlement, the seller is going to make a reasonable effort to clear all data stored on all their devices located on the property that are included in the sale. Seller further acknowledges that all personal devices owned by the seller, included but not limited to cell phones, computers, and tablets that have connectivity to the Internet of Things devices located on the property, will be disconnected and cleared of relevant data caches prior to settlement. Further, no attempts will be made after settlement by the seller or anyone on the seller's behalf to access any IoT devices remaining on the property. I have heard of this where the seller didn't disconnect that stuff and was monkeying with the thermostat to mess with the buyers of the property. Don't be that guy.
So how can you, so when you have this happen, that they need to do that, is there a way to, like, because you can't just be like, can you show me your phone has been cleared? Or like, how do you go about having
we,
them?
we can't really verify it. We really
Okay.
can't. So what's the simplest and most common one that we see here? It's the Ring doorbell or the Nest thermostat, right? Some of the ones that you don't think about. Some HVAC systems require a code to access them, especially some of the high-tech geothermal devices. You need to punch an access code to get in there and mess with it, because if you have those settings wrong, it can cause a world of hurt.
Appliances also can have that.
Yeah.
Most of the devices, whether it be Nest or whatever, there is a factory reset. You may have to contact them so that you can reset it, but unless it's one of the cheap, real bad off brands, they'll have a way to factory reset the device.
And a lot of times, whenever you change your Wi-Fi, you swap out the router, this stuff is rendered, useless, but not always, right? So, I mean, this could be door locks, this could be all sorts of stuff. So just be aware that these things exist.
So what is your responsibility as far as you can tell them about all that and what they need to do? But after that, how, like,
Manage the
what can it come
expectation.
back on you for if they don't comply with that?
If you didn't tell them,
Okay.
that we just tell them. And this paragraph will survive settlement. That's a nice reminder. Now, waiver of contingencies. I'm going to give us another 20 minutes on this, and we may not get through the whole thing. Sorry to drag it out, but this is super important stuff. Do you guys agree? So
Yes.
If this agreement is contingent upon the buyer's right to inspect or repair the property, I want to read that sentence again. If this agreement is contingent on the buyer's right to inspect and or repair the property, or to verify insurability, environmental conditions, boundaries, certifications, zoning classifications or use, or any other information regarding the property, the buyer's failure to exercise any of the buyer's options within the time set forth in this agreement is a waiver of that contingency, and the buyer accepts the property and agrees to the release in paragraph 28. So what's that mean? Refer back to time is of the essence. Use it or lose it. If you don't respond in the appropriate time frames, you lose your rights under the agreement. And under the agreement, your rights generally equate to the rights to do something or the rights to money. So if you don't reply in the appropriate time frame, you could be screwed. So the conversation I always have with my buyers, if I tell you to do something, it's not because I like to be a nag, it's because I'm here to protect you. So the buyer's due diligence and inspections, what I call the due diligence menu. Here's your rights and responsibilities. The seller will provide access to the insurer's representatives, and as may be required by this agreement or by mortgage lenders, to surveyors, municipal officials, appraisers, and inspectors. In addition, unless otherwise agreed, only parties and their real estate licensees may attend any inspections. You can tell Daddy the deal killer that I am sorry. I really value your opinion, but it's just not allowed under the agreement of sale. You cannot attend the home inspection. You can do that as a buyer's agent. You can do that as a listing agent. I'm sorry, who are all these people? I did not agree to a parade. I know that that is sometimes a difficult conversation, but has anyone had Daddy the deal killer show up? What happened, Kurt?
I I just let them know. Because it was one of the few buyers that I've handled, and I just told them, and well, and mom and dad were causing issues before that, so I kind of told them ahead of time, and they stayed outside the house.
And I'm really sorry. I really am, but the state has really tied my hands on this. I'm not allowed to let anyone inside the property unless I have a signed buyer's agency agreement. I really wish I could take you in there. I just can't do it.
Justin, not to shortstop you, I just had a question because we've seen it, and I know other people have seen it too. Is if you waive, let's say they waive all these, which does happen,
Yes.
and the appraiser for the mortgage company or the insurance company says we have to have this.
Yes.
What happens? I mean, I'm like,
Well, that's right back where we were, Kurt. That is
yeah, it kind
right
of
here.
yeah, it kind
Paragraph,
of overlaps the two things.
that's paragraph 8H5, where it says if the mortgage lender or a property and casualty insurance provider required by the mortgage lender requires repairs, 8H5 is where that lives. And it's a mini kind of inspection contingency like we're about to go over.
Okay, no, I'm not talking about requires repairs. I'm saying if they come and say we want it inspected,
Inspected how?
they require, let's say, a roof inspection.
Well, it says
It says repairs.
repairs, but it also says, where is it? That we have to grant access.
Well, yeah, I know they have to grant access, but what I'm saying is, does that, let's say they require that the roof be inspected, and somebody comes out and inspects the roof and says the roof's not good, but they've waived the inspection, but the mortgage company said it had to be. you're in that gray area there.
No, not gray area. If the mortgage lender, um,
Yeah.
we have to grant access to their inspectors.
It says it in
Yeah.
that one,
Yeah, and then if you,
B1.
yep, and to tag onto that, because I mean, the lender holds the money, so there's that. And
Yep.
then if you have an appraisal contingency, if an appraiser goes out there, and again, tying back to the lender, if that's who they work for, yes, we will appraise this on the condition that you replace the roof. It
Yeah. And
wouldn't have anything to do with the inspection contingency section. It would go back to,
what about
you know,
insurance
lenders
though?
demanding it.
Justin, I think it's under B1. Make the repairs, improvements at expense of the permission and access to the property.
Uh,
No, I understand that
it
you
says
have
that
to
we have
provide
to,
access.
and that access is for the sake of the inspection.
But the question was, what if they waive inspections? Is that right, Kurt? So they waive
Doesn't-
inspections.
Doesn't matter. We have to allow that inspector, that's required by, the mortgage lender or property and casualty insurance, providing insurance required by the mortgage lender.
Yeah, that was where I was getting a little hung up
Yeah.
there looking at those.
So you have the seller and the seller is jumping up and down and they're like, this is BS. They
Yeah.
waived all the inspections, but it's a different conversation. It's not that they waived inspections. It's that their mortgage broker and maybe subsequently appraiser is asking for this,
That's
not the
correct.
buyer.
That's
Okay.
correct. Yep. Buyers in the same bag as you. They didn't want that either, theoretically. Oh, right here. Seller will provide access to insurer's representative and as may be required by this agreement or by mortgage lenders to surveyors, municipal officials, appraisers, and inspectors. In addition, right there, the seller will provide access to all those people. And the seller will have, the buyer may make 2 pre-settlement walkthrough inspections of the property. Let's be specific here. For the limited purpose of determining that the condition of the property is as required by this agreement and by any addenda. The buyer's right to these inspections is not waived by any other provisions of this agreement. What are those inspections for? Are they for measuring? Better get permission to do it. Are they for getting quotes on flooring? No. Are they for contractors to come in and do bids on the property? Nope. They are for the limited purpose of determining that the condition of the property is as required by this agreement. All right. So if you have a listing and the buyers want to run a parade of people through, they want to get a quote for hardwood floors. They want to get a quote for new HVAC. They want to get quotes for new kitchen. I'm sorry. And that's a hard conversation to have. I've had that happen a million times.
Yep.
Right. But what are they doing? They're doing a end run around the inspection. They're trying to find out what they're dealing with. So if we're going to do a whole bunch of those, maybe we increase the EMD to provide a little bit more security for your seller. If we're gonna ask for access 14 times. Now, the seller will have all heating and all utilities, including fuel, on for all inspections and appraisals. Inspections being walkthroughs, because that's characterized in this clause. That walkthrough is an inspection. So if your seller is pissed at the whole situation about a delay in closing and they shut off power the day before closing, or they shut off power on the day closing was to occur and it extended, right? You need to have that power back on. You need to have all utilities on, because that buyer needs to inspect that stuff. As your broker, whether you're representing the buyer or the seller, that needs to happen. because we can't properly close out liability to protect your client on either side or you on either side if we don't have that inspection done. They need to walk through and say, yes, I agree. If you leave the door open and the day after closing, they come back because everything's broken, they're going to try. I've seen this too many times. They're going to just make issues. And we want to shut that down and say, well, I'm sorry, at your pre-settlement walkthrough, you said everything was good. You closed and you signed and you said everything was good. And if we didn't have the utilities on, then we abridged their rights to that pre-settlement inspection, and that's our fault. Make sense?
It does,
So-
but I have a question to circle back to Kurt's question as far
Okay.
as disclosure.
Very good.
Let's say somebody doesn't, this happens, you have to let them in, the appraiser came in, said, we don't want to find the value, the seller, and let's say they don't come to an agreement and it terminates. The inspector didn't find it. Now, I, of course, reasonably know that the roof is defective, but is it defective? And would the seller then have to disclose it if anything falls apart in a deal? Because an
I'm sorry, I didn't.
appraiser,
Oh, the appraiser said,
let's say that the buyer in this deal waives inspections, but then the appraiser and or lender comes back and says, well, no, these things have to happen. Seller and buyer can't come to an agreement. Seller's not going to do it. Absolutely not. No way. That's BS, whatever the situation. Let's say that in this case, it goes back on the market.
yep.
What is the responsibility of the seller to disclose? If it wasn't an inspection finding, but an appraiser or maybe a lender that hadn't ever seen the property.
I don't think they have and I think after this, we're probably going to delve into seller property disclosure
Okay.
as our next document to review and train on. But I don't think that an appraiser who's not a specialist who said we need an inspection, I don't think that that rises to a level. Just because it's old doesn't mean it's a material defect, right?
Yes, yes, that's correct. And as
Okay.
an agent, would we be in ethical hot water?
Nope. Call me about those specifics.
Thanks.
All right. All inspectors, including home inspectors, are authorized by the buyer to provide a copy of any inspection reports to the broker for the buyer. And the seller has the right upon request to receive a free copy of any inspection report from the party for whom it was prepared, unless otherwise stated. That's stated in other parts of this, that the buyer must provide that with their replies to inspection. However, the purpose of this is it gives us, as the listing agent, as the seller, the black and white written authorization to receive that copy directly from that vendor if it hasn't been provided, okay? That does not extend to appraisals. Now, the buyer waives or elects at the buyer's expense to have the following inspections, certifications, and investigations referred to as inspection or inspections performed by professional contractors, home inspectors, engineers, architects, and other properly licensed or otherwise qualified professionals. All inspections shall be non-invasive unless otherwise agreed to in writing. Now, if the same inspector is inspecting more than one system, the inspector must be a home inspector or comply with the home inspection law. Okay. Now, for elected inspections, the buyer will, within the contingency period stated in 13A, complete the inspections, obtain a written corrective proposal to the seller, or obtain the inspection reports and accept the property, terminate the agreement, or submit a corrective proposal. How many times? How many times have we talked to an agent or been the agent? No shame here. That we thought we had 10 days to do the inspection and then additional time to make the reply. Have you seen that? Have you experienced that? Here it is in black and white. You've got one time period to do the inspection and get your report in. That's that standard 10 days. Now, some language I want to draw your attention to here in line 340. It says the buyer waives or elects the specific stuff. Something that used to pop up occasionally that would bug me, just drive me crazy, was that they would elect a home inspection, maybe elect a wood infestation, and waive a radon. And then a home inspector would plop a reading device in the basement, even though it had been waived. Here's a scenario to discuss, and I'll probably wrap up with that for the day before we get into the specifics of these things. I want to talk about this concept of electing or waiving. I called a broker and I said, tell your inspector to come by and get that radon unit. I don't want a report to be issued. He said, what's the big deal? It's not contingent upon the radon. I said, but don't you think they're going to negotiate heavier on the home inspection or potentially even terminate the deal based on the knowledge that they acquire through that inspection that they did not elect? He said, yeah, but it's not contingent. What are your thoughts on this, guys? Was I just being a jerk? There is that option.
I agree with you. I think they would hit harder on asking for other repairs or higher estimates to cover the cost of the radon or back out, like you said.
Now, do they have the right to do the test because
No.
it's not contingent upon it?
No,
No.
Tell me why.
they can do it after they own the property.
That's right. Because it says right here that the buyer waives or elects. They waive it or they elect it. You can't waive it and still do it. And it's not waiving or electing the contingency. It's waiving or electing the inspection. Okay, so you can't waive the contingency and still do the inspection, because what you're waiving or electing is the right to do the actual inspection. Okay, guys? Don't pull that smooth one and wind up accidentally being in violation, and make sure you have that understanding with your home inspectors. Don't be upselling my people. Just because
That changes though if the lender wants you to have, or the appraiser wants you to have one of those and they've already waived it, correct?
yes.
Okay.
In almost I guess 18 years, I have had one lender required a radon test, which blows my mind.
In the case of a radon, somebody's going to have to come back in to pick up that machine and do the reading.
Yep.
So I would unplug it and I would now have a radon system.
That would live in my garage, yes.
Yeah. And the second thing is when I've had gracious sellers allow buyers to bring contractors in for the sake of estimates and that kind of stuff.
Yep.
And I had a really uneasy feeling. I think Kristen's on here. She knows my spidey sense, and they weren't doing it, but I show up. You're only supposed to be there for 15, 20 minutes to measure or whatever. There better not be anything else happening there.
Yep.
So,
yeah. I mean, they're doing an inspection basically, right?
Yeah. So in that case, it was just a contractor looking at moving a wall for them, and it was no big deal. But you just never know. The only person you know about what they're going to do is you. So,
And under the code of ethics, we have the authority as buyer's agents to be in there for the purpose that was authorized by that seller only. We have the authority, if we're doing a pre-settlement walkthrough inspection, to do what? It's the limited purpose of determining that the condition of the property is as required by the agreement and the addenda. It's not to do a favor to, do a full cost analysis of a renovation on this property that may cause this person to back out of the deal.
Hey, Justin, so to that point, I have had buyer's agents bring their buyer and a home inspector through my listings before during the showing. It's my understanding that that's not allowed at all.
That's correct. And I would pin that on the code of ethics that we have the specific basically license as buyer's agents to show the property as is understood by the seller, right? If the seller grants that, great. That's fine. As a listing agent, I love it. Do your home inspection, be informed, bring me a non-contingent offer that you've already educated yourself on.
but they shouldn't be opening a panel. They shouldn't be taking the front off the furnace, that kind of stuff on just a preview of the home. They're not
I
under
agree.
contract.
They do those walk and talks,
Yeah.
and I've used them in the past, but I always called the listing agent and said, hey, here's the situation. We want to give you the cleanest offer possible. Just these people have like 2 questions and they don't understand how this system works. Are you cool with a walk and talk with a home inspector? And I've had yeses and I've had nos, but you could be blurring the lines there a good bit if you just sneak a home inspector in. All right. I know that went pretty in depth. Thank you all for your attention on that. And I promise next time we get together, it will be the last time for the agreement of sale, but I really like going in depth on this. I hope that you found something valuable. And we're going to talk specifically about these contingencies and what they entail and what you need to be looking for as a buyer's agent and a seller's agent when considering these contingencies. After the contingencies, section 13 is a good one. Then we'll talk a little bit about title surveys, costs, and then we get into the remainder of the contract. There's a whole lot of if-then statements that I'm probably not going to go as in depth on. Does that work for everybody? Everybody okay with that?
Yep.
Okay. So next month, we're going to start off with line 348. Any other questions or comments or fun stories before we sign off?
Just thanks. I don't care how long you've been in business. Sometimes we forget more than we retain. So we always pick up something.
Yeah, I agree. Thank you very much.
Absolutely. I think we all need to review this agreement once a year in depth, just to, remind ourselves, this is your sword and your shield. This is your, this allows you to win deals and protect your clients when they go sideways. So thank you guys. I really appreciate that 18 of you showed up today. I appreciate that. And this recording is going to be helpful. We're going to email that out to everybody else. So thanks a million.
Thank
Have
you.
a great one.
Thank you.
Thank you.
Thank you.
Bye.